Hey guys, Michelle Kinney here. Thanks for checking in. Thanks for checking out my video. I wanted to make a quick video today on mathematics, and not the boring kind of math, so don't worry about that, but the interesting kind of math. And I wanna really drive home the idea that buy and hold for the long term is a broken concept and it does not work. And I'm going to show you mathematically why that's the case. And I'm also going to drive home the concept of this is really why people need to incorporate option selling in addition to stock buying. So let me show you a couple of things. I'm going to share my screen here. Okay, check it out. Share my screen, and I made this spreadsheet earlier this morning, and I just put some math in here, and it illustrates a couple of different points, right? So let me go through it quickly. What I did was I just assumed starting value of $100,000, right? So this is just a simple number spreadsheet. Again, this isn't boring math. This isn't geek kind of math. This is like important kind of math that illustrates specifically in black and white why buy and hold does not work. Now, if you invest 100,000 and if you go down 1%, let's say, so this is down 1%, your 100,000 turns into 99,000. And everybody can kind of see how that works, right? So 100K times 0.99, because you're going down 1%, 100K turns into 99K, right? Now, let's say you're at 99 and now you go up 1%. So you go down 1, up 1, right? What do you end up with? You end up with a little bit less than 99. You end up with 99. Oh, hang on a second. If you go back up 1%, you end up with a little bit less than 100 than what you originally started with. So you end up with 99,990. So that's a difference of $10, right? So really mathematically, if you go down 1%, you need to go back up 1.01% in order to get back to your original 100K starting ground, right? So does everybody see that math? And again, keep your focus. I know sometimes people zone out when it comes to math, but this is not boring stuff. And this is going to illustrate exactly why buy and hold does not fucking work at all. Now let's just kind of skip to, let me say I go down 10%, because, you know, and the reason why I'm illustrating this, people, is because the market is volatile, right? So who experienced the credit crisis back in, I don't know, 2007, 2008, when the whole market went down like 50%, right? You go down 50, you have to go back up 100 to get back to even. And that's what this math is showing you. And the reason why I'm talking about this today, more specifically, is because the market is at an all-time high. You know, we have companies with PE multiples of, you know, 500, 1,000 times over. So really what that's saying is we have companies, stocks, public companies that are trading for significantly more really than what they're worth on paper, at least anyway. I mean, we all know the value of a stock is really what somebody else is going to pay for it. But if we look at the actual numbers on what the company makes, the revenue and that kind of thing, we have companies that are selling for significantly over their multiples, right? So let me go back to my 10% example here. So let's say we started 100K, we go down 10%, right? Our 100K going down 10% turns into 90K, right? Then let's say the following day even, we go back up 10, we go down 10, up 10. We don't get back to our 100K. We only go to 99K. So here's what that means, people. That means we're losing $1,000, right? On this example of going down and back up 10%. And ultimately, if we go down 10, we have to go back up 11.11 to get back to our original starting ground of 100K. So this is why buy and hold doesn't work. So my history, right, of being an investment advisor with all these different broker dealers, you know, oh, buy and hold for the long term. It's about time in the market, not timing the market, right? It's like the mantra that all these people spew out of their mouth. That's not true. My philosophy, and I'm telling you mathematically, like if you look at it logically and mathematically, the real world is that it doesn't matter if you're rich, poor, young or old, you have a long time to go to retirement or a short time. If you go down 50, you have to go up 100 to get back to even. So if that said, do not lose money. Do everything you can in order to control your losses. Warren Buffett says that. Rule number 1, don't lose money. Rule number 2, say rule number 1, don't lose money. And the reason behind that is because the mathematics make it so fucking hard to come back, right? So let's go to another example. Let's say you start with 100K, right? And you go down 25%. I mean, it could happen because, like, I mean, look, we have drops in the market. A year ago, this past March, like when COVID had started, the market went down significantly, right? So people talk about, okay, well, I have time to go, I have time to go, I have time to go. you know, you don't want to subject yourself to unnecessary volatility when you don't have to, when there's another way. And the other way is options. I'm gonna show you that in a moment. But let me go back to my example. You start with 100K, you go down 25%, your 100 turns into 75. Now the market bounces back up, you go back up 25%. Your money only turns into 93,750. So you still have a deficit, a difference of over $6,000, 6,250 to be precise. And what does that mean? Mathematically, what that means is if I start with 100 and I go down 25%, I have to make 33.33% just to get back to my initial 100, right? So again, I gave an example of the 50%. That's like easy math. Go down 50, you have to make 100 to get back to even, right? Let's say, I'm going to use this as an example. And the reason why I'm using this is I had a conversation recently with my original, kind of like how I started managing money for investors back in 2007. So at that time, I was recommending Bank of America, right? Bank of America was selling at 50 bucks a share. You know, everybody was, my broker dealer was like, okay, everybody should buy Bank of America. Everybody, you know, our kind of like pitch, I guess, if you will, was, I don't know if you have the money or, you know, if you have the money today, I think you should buy some, right? How much should you buy? You should buy 1,000 shares. I don't know, start off high and then go low. So their point was everybody should be buying Bank of America, right? That's my point. Well, what did Bank of America do? Bank of America went from $50 a share to $2.50 a share. Oh my gosh, like what did it go down? You know what? I didn't put the mathematics ahead of time, but let's say it goes down 85%, right? If something goes down 85%, let's use our spreadsheet here. You start with 100K, right? You go down 85%, your 100K turns into 15K, right? Evaporated almost all your money. Let's say you go back up 85 again, you still are only at 27,750. You're still down almost 3/4 of your value, 72K. So what does that mean mathematically? Let's put the math to it, right? This is what you guys have to see, and this is what needs to hit home to you. You start with 100K, you go down 85%, and then you, in order for you to get back to your 100K that you started with, you have to make 566% on your money, right? Let me say that again. I'm going to say it again because I want this to hit home. You start with 100K, you go down 85%, you have to make 566% back to get back to your original investment, not even to make any money, but just to get back to your original investment. What does that tell you? That tells you that you cannot withstand. That tells you that the philosophy of time in the market versus time in the market is fucking bullshit. That tells you that it doesn't matter. Like, even if you have a long time to go to retirement, okay, I'm 20 years old and I can withstand the ups and downs of the market. These are all the fucking mantras that investment advisors spew out of their mouth. It comes from all the broker dealers, right? This is why it's bullshit. Because even if you're 20 years old and you have another 50 years to go to retirement, if we have a significant downturn in the economy, like, you know, it happens, right? So it happens, typically every 10 years, you have this bear market, and you have these cycles where things go down significantly. If your money goes down 85%, how likely is it for you to make 566% just to get back to even? It's kind of like digging a hole, digging a hole, digging a hole. Now you drop yourself, you drop your whole body in that hole, and oh my gosh, I can't even get out of the hole. It's like too big. It's like swallowing me up, right? So that is broken. Buy and hold is broken, right? The fact that stock trading in general, right? Let me go back to my other example that I've used in lots of other videos. Stock trading in general, you don't actually realize any of your gain until you sell your position. What do I mean by that? Let's say I bought Amazon. Let's look at Amazon. I'm just gonna, let me see, Amazon. You guys are seeing my screen, I think, right? Amazon is a fantastic company. Let's check it out. Don't be confused by all these like goofy numbers. I'm just gonna pull up a, I don't know, I'm gonna pull up a chart on Amazon. So this is kind of like, this is right here is a 1-year bar chart, right? So it's kind of like, okay, well, it started a year ago, Amazon at, the low was 2017, and now it's 33.16, right? So you guys see that over there. Well, let's look at 5 years. I'm just gonna say, okay, because Amazon's a great company. So more, let me look at 5 years. Okay, so here is just a line chart. It shows like, well, what did Amazon do over the past 5 years, right? I don't like line charts. I like bar charts better. Let me just go to bar chart instead, 5-year or daily, 5-year daily, accept. Okay, I'm going to illustrate this, okay? So 5 years ago, right? 5 years ago today, as an example, approximately, I'm just using approximations. The low of Amazon was $618, right? So $600. Now it's 3,300. So 600 to get to 3,300 is like multiples of, you know, not 2 times because that'd be 1,200, not like 3 times because that'd be like 1,800, like multiples of where it was. Here's my point. Even if you bought Amazon back then, and it shoots up to the moon, which it has because it's a fantastic, strong, healthy company, right? You can't actually like, it's not like spendable money. So here's what it is, people. It's like, okay, I get to log on my E-Trade account or my Fidelity account and I can see the gain. I can see that I paid $600 and now it's 3,100 and I started with 100K and now I have 500K or whatever the case might be. Whatever those, I'm just grabbing numbers out of the air, but you get my point, right? And you get a statement in the mail that shows, oh my gosh, I started with 100 and now I'm at 500. But you know what? That's not spendable. Do you want money that you see on a computer screen, or do you want money that you can actually go take to the grocery store or go buy a new car with or go buy a house with or something like that, right? What is it that you want money for, right? I don't know about you, but I don't, that doesn't like make my day seeing some fucking numbers go up on a computer screen, like green numbers over red numbers, right? I want to spend money with the people that I love and do the things that I want to do, right? So that said, stocks are a broken kind of system. I'm not saying that you shouldn't trade stocks. You should trade stocks, but you should also incorporate selling options. And here's why. And I've made other videos like this in the past, but I'm going to repeat it because repetition is the mother of skill, right? And the point that I'm trying to make is when you sell an option, you get paid cash in your pocket right then and there, and it's spendable income. You don't have to, let's say, if I sell a put on Amazon, just as an example, I don't have to own Amazon. I can sell a put contract on Amazon. I can get paid money into my account. And what I'm doing is I'm committing to buy the stock if it drops to a certain level, a level that I dictate originally, right? If it doesn't go down, I don't buy the stock, but either way, I keep the money. And one of the best parts about trading stock options is, you know, there's so many different expiration dates. What does that mean? That means that like I can lock in my profits week to week. Actually, there's some investments that you could do like every 2 days. I'm going to talk about that in another video. I don't want to confuse anything here, but we'll just stick with the fact week to week. What do I mean by that? That means that I'm not subject to future volatility on Amazon, right? So Amazon goes like this, all stocks, all the market in general goes like this, right? But I'm not subjected to that market volatility when I get to lock in my profits. What I mean by that, let me give you an example. Amazon right now is $3,300 per share, $3,313. Now, let's say I just inherited some money from my dead grandma and I have a couple 100K and I don't have any stocks. I'm just using this as an example. And I like Amazon as an example. It's a rock star company, even though it's like, it could be, you know, significantly overvalued based on, you know, its earnings and things like that. I mean, actually, the PE is not all that high. The price to earnings multiple on many companies in the market today is like 500 plus, let's say, which is ridiculous. This is only 79. I'd say only, but typically, like a good value company is like 15, just to kind of put the numbers in perspective, right? 15 PE ratio, but that's another video. Let me go back to my example. I inherited some money from my dead grandma and I inherited a couple $100,000. I want to buy Amazon, right? I don't have any stocks or anything. I don't want to buy 100 shares or 1 share at $3,300. Fuck, that's a lot of money, right? I could sell a put. Let's look at April 16th because April 9th is tomorrow, right? Today's Thursday, April 8th. I don't want to do one day. I want to look at a week, right? So next Friday, right? Okay. I want to say, you know what? I really like Amazon, but I don't want to buy it at 3,300. I want to buy it at, oh, I don't know, people. What do you guys think? I want to buy it at 3,000. What do you think? I don't want to buy it at 3,300. I want to buy it like 10% less. I only want to pay like $3,000. So check this out. And I know this looks confusing, but I'm telling you, take my class and we'll clear everything up like crystal clear. Here's what this means. I could sell a $3,000 put. Now don't get mixed up or lost in the lingo, right? Here's what happens. It last traded 2.53. Okay, I'm gonna break it down to simple like English for everybody. $253 gets dropped into my account. $253. Okay, now let me go back to the beginning because repetition is the mother of skill. I want to make sure everybody's clear on this. My grandma died, left me a bunch of money. I don't have any stock. I like Amazon and I want to kind of like start trading in the stock market. But I don't want to pay $3,300 a share because that's a lot of fucking money. I want to pay $3,000 a share because I think, I want to only buy if it's on sale. I don't want to buy retail price. I don't want to buy, excessive price. I only want to buy sale stuff, right? Okay, stay with me. I picked the number 3,000. I could pick any number I want, people. And for every buyer, there's a seller, and the market just matches us up. We don't have to go find somebody to take the other side of our trade, right? The market matches us up. So I picked the number 3,000. It's a nice round number. It's got to come down 10% in the next week. What's the likelihood, the statistical likelihood that Amazon is going to go from where it is now, 3,300 a share, to 3,000 between now and next Friday, 8 days? Well, guess what? It's 3%, right? How do I know that? Because when I trade, like the platform tells me. Now, it's not like exact, like black and white, right? But it's approximately 3%. Now, does that mean it can't happen? No, but it means it's very unlikely that Amazon is going to drop 10% in just a week. It's very unlikely given how it's been behaving, right? 3% likelihood. Okay. $253 gets dropped in my account. I could spend that if I want to, however I want. I can go out to dinner. I can go buy a new pair of fucking sneakers. I could do whatever I want, right? Between now and next Friday, pay attention, between now and next Friday, if Amazon drops below $3,000, I might have to buy 100 shares at $3,000. Now remember, I'm using an example. Amazon's an expensive stock. I get that, people, right? But this works for any stock. I'm just using an example like my grandma died, left me a couple $100K, and I like Amazon, right? So if Amazon drops below $3,000 a share, I'm going to commit that I'm going to buy Amazon at $3,000. Now it's not likely to happen, but if it does, I'm going to buy 100 shares at $3,000. Well, you know what? That's a pretty good deal. You know why? Because I fucking like Amazon. I just told you that. And Amazon right now is $3,300, and I'm going to buy it on sale at $3,000. Now it's not likely to drop. I'm going to keep the $253 no matter what happens. That's my money. I get to keep it. That's the beauty when you sell options. I keep that no matter what happens. What if Amazon doesn't drop to 3,000? Or what if Amazon like goes down to 2,900 and maybe pops back up again? I might not get assigned. I'm going to keep the details for another video because I don't want to get like muddy up, I don't want to confuse anybody here. But if Amazon doesn't drop below 3,000 between now and next Friday when this contract expires, I do not buy the shares, right? I do not buy Amazon because, again, I only want to buy Amazon if it's on sale. And if it's on my sale price, I get to pick the price, right? $3,000 per share. So I'm not buying it, right? Either way, I keep the $253. So check it, people. When you sell a put, when you sell an option, it gives you the ability to get money for free from somebody else, right? So I get money. And all I'm doing on the flip side in the exchange, I get money. And what am I committing to? I'm committing to buy a stock that I pick, Amazon. I like it anyway, at a price that I want to buy it at, $3,000. I chose that price before a certain date that I pick, which is next Friday in this example. Why doesn't everybody do this? And here's the best part, people. Let's say Friday comes and goes, right? Now, again, I collect my $253. Friday comes and goes. The trade is over. I have no more risk. Let's say Monday comes, right? Let's say Friday, Amazon, is over 3,000 and I don't buy the shares. Let's say it's $3,001, right? Even a tiny bit over. I don't buy the shares. The following Monday, let's say Amazon drops to $2,000. I still don't buy them because my contract ended, right? So the risk is over. What I'm trying to say here, people, is that I'm locking in my gains week to week. I am not subjecting myself to market volatility. This is so much better of a way to trade than any other way. I'm telling you right now, I want to use sometimes I swear because I want to enunciate things. And sometimes I say things that might sound kind of harsh or rude because I want to enunciate things. I want to tell you right now, stupid people, broke people, unsuccessful people only trade stocks. Smart people, successful people, people that understand oh my gosh, I'm going to beat the fucking system. The system's already stacked and I'm going to beat the system. Will trade stocks and sell options. I'm telling you, you could believe it. You could not believe it. I could tell you the sky is blue when I go outside. You could say, Michelle, I don't think so. But the fact is that the sky is blue. And this is the fact. Stupid people trade options and smart people trade options I mean, I'm so sorry. Back up. Stupid people trade stocks only, right? It's a fucking broken system. Buy and hold for the long term. Broken, broken, broken. Bullshit what advisors tell you. Smart people trade stocks and sell options. So anyway, it's not that hard. I know this might be confusing. Sometimes people say, oh my gosh, I can't do that. Look at all this shit on the screen. It's too much stuff for me. If you break things down into easy bite-sized pieces, you can learn anything. This is, I guarantee you, this is not rocket science, okay? If you commit to, let's say, 10 hours, like I'm going to commit the next 10 hours of my life and I'm going to learn how to trade options. And I know ahead of time, it's not going to be that hard. I'm going to learn some basic concepts. And then after that, you get to use this knowledge for the entire rest of your life. You could fire whoever it is that you have working for you now, right? So a lot of times people are like, oh my gosh, I can't trade my own money. I can't invest myself. I'm just going to fire this bozo financial advisor down the street. What the fuck? They were just selling vacuum cleaners door to door last week. You don't even realize that, for this company that fucking does all this shady shit that's got all these like FINRA violations, right? But you don't even know that because you don't pay attention to it. What I'm saying is nobody's ever going to treat your money better than you will. I guarantee you. Learn this, take 10 hours of your life. You have that information for the entire rest of your life. And then control your own destiny. Instead of buying stuff at retail price, buy it on sale. It's kind of like like dumb broke people, like, work for the man, we'll say. I don't know. Like, first of all, like anytime you work for a company, right, you're never going to be financially free. Like unless you work for yourself, like all the good things come to people that work for themselves. That's probably for another video. But my point is this, right? So broke people, unsuccessful people, they go out, they work, they get a paycheck that's X dollars because they know that they can count on that each and every single week or whatever the case may be. And then they use that cash in order to buy their whatever, buy a TV, buy a dining room set or whatever. Smart people, successful people will leverage their money. So they work for themselves. There's no cap on what they're doing. So the more creative they are, the better that they are in their field, the more money that they're making. I mean, that's just the way the universe works, right? So they move more money. And then instead of, okay, I'm going to go take the cash that I used, you know what? No, I'm not going to do that. I'm going to finance this. I don't know, I'm going to get like a car loan at like 2% interest. I'm going to pay my note, every month. And then I'm going to, use the cash that I have to invest in, let's say, stocks and stock options. So I'm paying 2% here and I'm making 20% here, and they leverage their money. And that's how you get ahead. And that's what stock options do for you. So anyway, I'm kind of like rambling a little bit. I don't even know how long I've been going because I'm on Zoom right now recording this. I'm going to put it on my YouTube channel. So please subscribe to my channel, right? Like this video. If this is cool for you, if this is like, hey, oh my gosh, I never really realized these numbers, right? If I lose 70%, in my account, I have to make 233% just to get back to where I started, not let alone making any money, right? So if this stuff is kind of cool and interesting and it opens your eyes, like the video, subscribe to my channel, maybe consider taking my class. It's going to be bomb. I guarantee you're going to learn things that you never, ever even knew existed before, and you're going to be able to control your own destiny moving forward. So anyway, I hope this information helps. I know I talked fast a little bit, and happy trading to you.